Bitcoin, Ethereum, silver, uranium all have retreated from their peaks. Wyckoff Analysis is less about predicting the future and more about understanding the present. It's about reading the signs, the patterns, and understanding what the big players, those who really move the markets, might be up to. Let's start with Bitcoin and Ethereum. Wyckoff might show us if we're in a stage where the big players are accumulating, preparing for a surge, or if we're in the distribution phase, where they are selling off, signaling that a drop might be coming. It's like watching the tides. You can't control them, but if you know how to read them, you can decide when to set sail and when to stay in port. This is the Bitcoin chart on September 6. It clearly shows the distribution cycle is at its end, meaning a drop is very likely. Compared to the distribution cycle we had in 2021, we have a cycle of shorter duration this time. You may ask, how far would the price drop this time? I believe no one can give an exact answer. However, I have drawn a long-term playground zone as shown in the white box in the chart for your reference. There may be a chance that Bitcoin would fall back to the 20,000 to 33,000 range. I believe people that have bought it at a high price wouldn't want to see that happen. Next is the Ethereum chart. It shows something similar to Bitcoin. A shorter cycle, but instead making a new all-time high, it peaked at a lower price this time. Also, Ethereum is taking a step ahead of Bitcoin, and is getting closer to the long-term playground zone. Let's see whether this drop will stop around the top of the zone around 2000 or the bottom of the zone around 800 to 1000. Now, let's talk about TLT, the ETF that tracks long-term US Treasury bonds. Bonds might seem boring compared to the excitement of crypto, but they play a huge role in the overall financial landscape, and Wyckoff can help us understand the forces at play here too. Compared to Bitcoin and Ethereum, TLT seems to be at the end of its accumulation cycle instead. If it really rises back to the long-term playground zone, it will be somewhere around 110 to 140 in the near term. But of course no one would be sure how quickly or slowly it would take for the price to get to the top of the playground zone. Now, onto gold and silver, the classic safe havens. These are assets that people have turned to for centuries when they're worried about the economy or inflation. But even these ancient assets aren't immune to the forces of supply and demand. And that's where Wyckoff comes in. Now, we are looking at the TSX Global Gold Index ETF. It looks like it's halfway through the distribution cycle, so the party may last a little longer. However, do not get overexcited about it, because when we zoom out to look at the bigger picture, the current price is very close to the top of the previous peaks, so make sure you have your risk management measures in place. Next on silver price. Silver price chart shows it is deeper into the Wyckoff distribution cycle. It doesn't mean a big drop is coming for sure, as it can possibly go somewhat sideways. However, if we zoom out to take a look again, we cannot eliminate the possibility of the price getting back to the mid-2010 range, so we have to monitor closely. Next, let's talk about uranium, which might seem like a bit of a wild card compared to the others. Uranium's price is influenced by factors like energy demand, geopolitical stability, and environmental policies. Wyckoff can help us see when the big players believe uranium is about to power up or cool down. Uranium also shows it is near the end of the Wyckoff distribution cycle. It has enjoyed some very fruitful rise since 2021, almost reaching a price that is same as the peak in 2007 in the beginning of 2024. The long-term zone is somewhere between $9 to $17 in terms of the physical uranium trust we are looking at. It will be a 30 to 50% drop if the price really returned to that zone. But here's the thing, Wyckoff isn't a crystal ball. It's more like a weather vane, pointing us to the right direction. But it's up to us to decide how to act on that information. It's about understanding that the markets are driven by human behavior, by fear, greed, hope, and everything in between. And by studying these patterns, we can get a better sense of where things might be headed. So, the next time you're looking at the price of various assets, remember that there's a story being told. A story of accumulation, markup, distribution, and markdown. And with Wyckoff Analysis, you've got the script in your hands. But don't just take my word for it. Keep an eye on those charts, look for those patterns, and see what the story is telling you. Because in the world of investing, knowledge isn't just power. It's the key to unlocking opportunities and protecting ourselves from potential risks. And here's a topic that you may want to learn more about. See you around at Asset Tech.